Deputy Finance Minister and Chair of the Public Investment Corporation, David Masondo, has shot down talk of prescription of assets. He says foreign investor confidence in the efficiency of South Africa's capital markets would be undermined as a result, and so further reduce the available savings pool. His comments come a week after Health Minister Aaron Motsoaledi commented that money from the PIC would be used to fund the upgrading of health infrastructure as part of the contentious national health insurance. On that note, Business Unity SA says it's encouraged by the government's openness to engage on the National Health Insurance Act. And the organization has added that it will, at the President's request, submit a proposal to address its concerns. The legislation has faced harsh criticism related to its cost and implementation and its impact on the multi-billion rand private healthcare and health insurance sectors. BUSA says its aim is to help make the NHI Act workable, affordable and implementable while advancing universal health coverage. Inflation has slowed. For August, inflation moderated to 4.4%. That's from 4.6% previously and marks the third consecutive month of decline. Inflation is now at its lowest level since 2021. That's thanks to slowing transport and housing costs. The reading is now below the Reserve Bank's midpoint target of 4.5%. And this has given weight to consensus that the SARB should lower rates tomorrow. Analysts expect a 25 basis point cut. Southern Sun has forecast an interim earnings rise of at least 20%. The hospitality group says this is due to lower finance costs thanks to a reduction in debt levels. Its share buyback scheme has also helped as fewer shares are in issue when compared to the prior period. Alongside the outlook, Southern Sun also gave some insight into its trading position. For the first 5 months of its 2025 financial year, occupancy improved to 57%. That compares to 55.9% previously, and the group's average room rate for the period increased 1.7%. Met Air has warned of a plunge into the red. The automotive component manufacturer has forecast a headline loss per share of around 3 cents for the half year. That's from headline earnings per share of 41 cents a year ago. The slump is due to a jump in net finance costs. Met Air will publish results on the 26th of September. Raubex is eyeing a profit jump. The Infrastructure Development and Construction Materials Supply Group expects interim headline earnings per share to be as much as 55% higher. That's due to what it calls a more than satisfactory performance at its various divisions. The firm will open its books on the 11th of November. Grindrod has inked a deal to own a TCM. The company already has a majority stake and will now buy Vitol's 35% holding for 1.3 billion rand. This will give Grindrod 100% ownership of TCM. TCM owns a dry bulk terminal in Maputo that has the capacity to export more than 7 million tons a year of primarily magnetite and coal. Grindrod says the asset will allow it to unlock its value creation across the Maputo corridor and drive its pit-to-port solution for its customers. And Cilo Cybin set to branch out. In an interview on Business Day TV's Africa Pulse show, CEO Gabriel Theron stated that the company's plan is to branch out from cannabis and that an entry into the psychedelic space is imminent.
Yes, the next step for us definitely to get involved in the psychedelic space, provided our regulator allows us to, but it is definitely on the cards.
How far out are you from initiating that?
A few months.
Fantastic. And also for export?
Yes.
You can catch that full interview tonight at 8:30. In international news, alphabet unit Google won its challenge against a $1.66 billion antitrust fine imposed 5 years ago for hindering rivals in online search advertising, a week after it lost a much bigger case. For more detail, let's take a look at this report.
Alphabet's Google now won't have to pay at least one huge fine to the EU. The tech giant won its challenge against a $1.66 billion antitrust fine imposed 5 years ago. The European Commission had accused Google of hurting rivals in online search advertising. It said Google used its dominance to prevent websites from using brokers other than its AdSense platform that provided search adverts. The practices it said were illegal took place from 2006 to 2016. But while the Luxembourg-based General Court mostly agreed with the EU competition enforcer's assessments of the case, it annulled the fine. The judges said the Commission had failed to take into account all the relevant circumstances in its assessment of the duration of the contractual clauses that it had found to be unfair. The AdSense fine was triggered by a complaint from Microsoft 14 years ago. Google has argued it changed the targeted contracts in 2016 before the Commission's decision, but the company must still pay a separate EU penalty. Last week it lost its final fight against a $2.7 billion fine for using its price comparison shopping service to gain an unfair advantage over smaller European rivals. Google isn't the only US tech giant to fall foul of EU regulators. Meta faces a huge fine over its alleged efforts to dominate the classified advertising market. That's according to Britain's Financial Times on Wednesday. The report said EU regulators will claim Facebook's parent company links its free marketplace services with the social network in an effort to undermine its rivals.
And the International Association of Machinists and Aerospace Workers reports that Boeing and its largest union will resume contract talks in the presence of federal mediators after failing to agree on key issues of wages and pensions. Let's take a look at this report.
Boeing and its largest union will resume contract talks on Wednesday with federal mediators present. That's according to a leading union which represents more than 30,000 Boeing factory workers. Both sides failed to agree on the key issues of wages and pensions on Tuesday. Members of the International Association of Machinists and Aerospace Workers went on strike last Friday. They've pushed for a 40% raise over 4 years, well above the plane maker's rejected offer of a 25% rise. It's their first full contract negotiations with Boeing in 16 years, but unions accuse the company of not taking mediation seriously. The firm and the US Federal Mediation and Conciliation Service did not immediately comment. Now the strike has halted production on various Boeing models, including the best-selling 737 MAX jets, and delayed deliveries to airlines. Boeing said Monday it was freezing hiring. It also said it was considering temporary furloughs to cut costs, as its balance sheet already carries $60 billion of debt.